the coins that actually do have fundamental value that can be backed up and are scaling and have the right metrics are probably going to outweigh the ones that are kind of more narrative based. And I think we're already starting to see shifts happen there. But if you imagine a world in, let's say, 24 months where you have a market structure bill, safe harbor, and disclosure regimes, it's going to be very different to how we look at these projects because we're just going to have more information. So I think we also believe that there will be a point where the market matures, and it's probably going to be a harsh reality for many projects.
When is that point? Today's guest is Pranav Kanade, the portfolio manager for digital assets at VanEck, and Wyatt Lonergan, the GP at VanEck Ventures. VanEck is a well-known asset management firm that has been around since the 1950s and has made strides in the crypto space in recent years. It also has its own spot Bitcoin ETF and a venture fund that also invests in crypto startups, among other things. I'm excited to have both of you in the studio today. Welcome.
Thank you.
Exciting.
You guys are so quiet now once the cameras start.
No, we're very bubbly people.
We're very bubbly. This could be a fun episode. Yeah. To start off, how did you guys get into this industry? Do you have a finance background or? So
we got like slightly different stories. I went to NYU. I always tell people I was lucky to be roommates with Kyle Samani in one of my college years. Okay. And he kind of crypto pilled me in 2017. But I spent most of my time in TradFi. So I've been following and involved in the space more or less since 17, I would say. I generally looked at everything back then and said, what are the odds like this thing becomes something real in the future? It was very, very low at the time. 2020, 2021, I would say much higher because you could sort of look and feel and play around with DeFi and then extrapolate what the world could look like 10 years later. I'll cut the longer story short, which is I generally looked around in 20 and 21. I was allocating to other managers, primarily in the VC side. And I was like, who are some good liquid managers I can allocate to? And that's when I was doing liquids myself directly. Turned out there were not that many good liquid managers. And I generally had a view on what could be a good liquid strategy in the space. I cold emailed Jan, who runs VanEck. We kind of talked for over 6 months and incubated what is now our liquid fund. I've been doing this since 2022. So we started this thing at the bottom of the market last cycle. Been running it. As you've probably seen, our crypto Twitter presence has really taken off because we decided to give our corporate Twitter account to a very young person who's crushed it. And while that was happening and people kind of knew we were doing ETFs and our liquid fund, we started to see a lot of founders come to us with really interesting ideas. And we said, well, there's no like strategy or capital or real approach to this whole venture thing for us. Can we find someone that kind of fits our view of the world and how we see this industry playing out, but also is really talented at this?
And you found Wyatt?
Yeah, we just ran into him on the street at Grand Central. And they're like, Wyatt, why don't you come over?
No.
Yeah. It was Penn Station.
It was Penn Station. No, we had lots of interesting overlaps. I knew Jan's son, Nick VanEck, who's the CEO of Agora. At the time, he was at General Catalyst. I was at Circle. And we just had, many relationships. But I think we viewed the world through a similar lens, which was, this is really important infrastructure that can enable finance in a new way. And if we're early to this could be kind of, a 10-year thesis. And so how do we invest in it at the earliest stage? And then how do we, create different vehicles to support the ecosystem as it grows? Pranav is downstream of that with liquid and then the ETF products. And we'll have lots of other things that I think will come out. But my journey in crypto kind of started through Circle, really. So Circle acquired a fintech company I was working at in 2018. We announced it at the Security Token Conference back when STOs were a thing, if you remember that, security token offering. So a lot of what I'm still investing in today and a lot of what we're working on at Circle is like, how do we upgrade the financial system? How do we tokenize new assets and actually create secondary market liquidity? How do we use stablecoins for payments? Like actually try to embed this stuff into the real world. And I think the technology has like largely been ready. I would say probably over the last 3 years. We've had L2s, you've had blockchains like Solana, better wallet infrastructure, like the whole abstraction piece is coming in. Meanwhile, stablecoin metrics have kind of flown up and to the right, largely for trading, but still, when you're settling like $27 trillion a year, it usually suggests you're onto something. But we've been blocked by the regulatory piece. And so it was very opportune timing. I came over a year ago. We announced the fund in October. By November, the whole world has changed. And we're a $40 million fund, early stage, primarily focused like the first two financings of a company. So pre-seed, seed, we'll do some occasional Series A's. And our view as we were pitching for the fund was like, we want this to be kind of fintech 2.0 and crypto rails, which was really funny because the first couple months fundraising, people are like stablecoins for B2B payments. Like,
no, that's what everyone's wanting to talk about.
Yeah, but there was a complete 180 in the market because of Trump and because of the SEC changes. And so it's really funny how like quickly, the world can change. And we just happened to be, my partner also came from Circle. We led the corporate venture arm there, which we helped start in 2021. So, for the past 4 years, this has been the thesis we've been working on. And, it was a great trial and error period. So now it's I think it's off to the races. I'm sure we'll talk about some of the companies we've invested in, but it's unique being able to sit within, $120 billion, 70-year-old asset management firm who's been trying to solve these problems as well, dating back to 2017. Mm-hmm. And so now we have kind of funds that are specifically dedicated to this. And it's been awesome.
Far. So, I guess on the fund side of things, it's been about 7 months, right? And you mentioned how in the beginning it was maybe a 180 shift from October to November to maybe today? Or has it shifted throughout the market in the past 6 months from November to now mid-May?
I would say the public perception has shifted in the last 6 months. Like there have been teams like Denari who were recently announced, and many others who have been actually working on this for like 3 years. And so now I think people can see the light at the end of the tunnel and you're starting to see the adoption curve like scale pretty aggressively. So it was more like, can you convince people that the shift is going to happen? When you have a president who comes in and says, we're going to make this the crypto capital of the world, when you have people like David Sachs come in, Hester Pierce, like all of a sudden, I think the world can kind of see that like, oh, wow, we're going to get regulation. Now we're kind of fumbling it on the 1 yard line, but like our view was 12, 24 months from now, we're going to have some regulation. That timeline got pretty quickly expedited with Trump coming into office.
Mm-hmm. I think when we started talking, one of the things we both kind of had in common was generally identifying which aspect of, like, let's just say the broader crypto market is going to find product market fit next or is in the process of it. Because we both started with the baseline that Bitcoin was the only asset that has product market fit. Everything else is just kind of an experiment. And if you remember, like the last cycle, there was many experiments that were taking place. People are doing things with DeSci and then, DAO governance and gaming and NFTs and all these different things. Everything was like this, everything had this great narrative. But then when you looked at the data, there were not that many people actually engaging with this stuff. It was like the same 100 people doing stuff around this. And so one of the things we both kind of aligned on was, okay, let's just start with the baseline. Bitcoin's the only thing that kind of has PMF. It seems like the next thing are stable coins. But if the stablecoin thing takes off and we go from 100 million people using stables to 1 billion, 2 billion, what's sort of the next thing after that? Well, our thesis collectively was, and it kind of continues to be, which is if you can get dollars, if you export the dollar, then the next thing you can do is export the US capital markets to people. And so we both kind of have the same view. And we generally have now executed that view. He does it in a different form than I do it. But the general kind of conversation we have with founders is like, you can come at the pre-seed stage to Wyatt. Most things go to a token or exit in token form around 18 months or so. So we are kind of there to help you do that. Like my focus is token cap markets. And we can generally tell you where the token capital markets are today and where I think it's going to go in 12 or 24 months, what to do, maybe what not to do, and how to think about it all. And then hopefully, eventually what we tell people is, I don't think this model of doing single token ETFs is going to be like the future state. Like it doesn't make sense to have like an ETF for every single token down coin market cap, because it's ultimately not going to be suitable for the end audience, which are like these RIAs, and like, try to explain to them what each one of these things are. Where you'll probably end up in the next couple of years is our multi-token ETFs that are either somewhat rules-based, like the S&P 500 is rules-based. You'll have an equivalent, I think, in token markets. And so the conversation I have with most founders who have tokens is like, how do you sort of build your project such that you can eventually make it to that part of the world? So I guess we have the full suite that way.
Yeah. I do think there is a lot of different ETFs being filed out there, and I'm not necessarily sure there is demand or appetite for all of those. And it's almost just like a buzzy headline or like, oh, look, insert random token filed for ETF in random jurisdiction, right?
Yeah.
So is that kind of what you're getting at as well, where it's like, you could launch it, but if the opposing side, aka buyers, aren't interested, what's the point?
Yeah, I think I can give you kind of both arguments, which is the reason for any of these projects to have a single token ETF is to build in the optionality that now TradFi firm XYZ could theoretically get exposure to your project without having to like set up custody on crypto rails, right? So that's kind of like, from a project perspective, always having the pipe and optionality is very valuable. But ultimately, most large pools of capital need to be sold these products. They're not going to just wake up one day and say that I'm going to go learn about this and buy it, unless it becomes so obvious. And we sit within an organization where we interact with like the salespeople who ultimately market these products, and they're still trying to go up the learning curve on the Ethereum spot ETF, and then try to get them to understand about staking and all these things. So I think just putting an ETF out there is not just the point. I think you have to have a distribution strategy around it. The projects themselves can figure out that distribution strategy if there is an ETF out there.
I also think part of this, though, is like coming back to the product market fit point. In a world where maybe you're grasping for product market fit, the whole institutionalization of crypto has become a narrative where people have tried to use, an ETF to suggest to the market that there is TradFi demand. And so I think we'll see whether or not that's the case. I think you could see it for an asset like Sol, where I imagine there's probably large TradFi demand. Outside of that, there's probably only a few more. But to Pranav's point, something like an index fund that would give you broad exposure to a select group of companies, that's interesting. And I also think you're going to have, like, as crypto grows up, probably the inverse will happen, where the coins that actually do have fundamental value that can be backed up and are scaling and have the right metrics are probably going to outweigh the ones that are kind of more narrative based. And I think we're already starting to see shifts happen there. But if you imagine a world in, let's say, 24 months where you have a market structure bill, safe harbor, and disclosure regimes, it's going to be very different to how we look at these projects, because we're just going to have more information. You're going to have more information. Every retail investor and every TradFi institution is. And so if you have them now, these analysts now commenting on XYZ token that doesn't have any fundamentals and has done some shady things with market makers, like you can imagine, they're not going to get an ETF. They're not going to be part of an index fund. They're going to lose. So I think we also believe that there will be a point where the market matures, and it's probably going to be a harsh reality for many projects.
When is that point?
I think when you get regulation.
I think we're in the middle of it happening right now. We're in this transition. What I tell people is, like, altcoin market, if you take out Bitcoin, ETH, and stable coins, is about 750 billion. That's basically like your top 60 tokens make up that market cap. I fully expect that 750 billion market cap to be a lot bigger in the future, but the 50 or 60 tokens that make up the composition of that will just dramatically change, because I think there'll be better assets that come to market. One category we keep talking about are tokenized equities. I think more companies will choose to exit in token form than exit in, like, I'm going to list it on the NASDAQ type exit. And also, I think the composition of, like, sort of what makes up that top 50 will dramatically change over the next couple of years. So I think, as someone running a liquid strategy, I think my focus is, let me not own these, these legacy assets. I'm going to focus on what's going to come in the future.
On the liquid side of things, I feel like another topic, and Wyatt kind of mentioned this too, is like tokenization. And we've had a lot of guests on who have talked about this. Some believe that you shouldn't tokenize everything, and others think it should just only be highly liquid assets. I'm curious for you two, how do you think about that? Because tokenization is a very hot topic right now, and everyone seems like they're trying to, like, get in on it. And maybe that kind of goes back to the point you were making before. And there's value there, right? But maybe not everything needs to be tokenized. And how do you think about it from a liquid stand?
Yeah, maybe you might have a different view than me. I think
that's good.
Yeah, so I don't know. We haven't talked about this, but I generally think, so I can't remember the exact numbers, but if there's 250 billion of stables out there today, let's say
about that,
I don't know, 20, 30% of it is held by people as a store of value somewhere outside the United States. I'm like some dude in Turkey, and I have a bunch of Tether in my wallet as like a way to get away from the lira. And then you kind of say, okay, in the future, if that 250 goes to the 3 trillion or whatever Treasury put out last week as their number, how much of that growth is coming from store value versus people just buying stables to speculate on other tokens? If you make the assumption it's a lot of it, then it's natural to assume this population will want other investment products to swap their stable coins into that are not speculative tokens. So bringing all kinds of useful financial products on chain, tokenizing them to bring them on chain makes sense if that's where you're going. What to me doesn't make sense is bringing illiquid assets on chain and then allowing people to take on liquid liabilities against it. So like someone who says, I'm going to bring on like an illiquid credit fund on chain, but then you can then loop it in a DeFi protocol. Like that doesn't make too much sense to me, because then that's how you sort of set up like systemic risk of like people wanting eventually blowing up.
I would totally agree. I think we have about 19, 20 billion of like tokenized RWAs on chain today, and most of them just sit there and they do nothing. So what we should be solving for is the liquidity piece first and foremost. I do think that we should be bringing on inaccessible and initially illiquid assets. Blockchains are really good at actually enabling you to create liquidity pools to service those. We invested in a company called Manifest that basically takes a basket of home equity investments, tokenizes it into a single token called USH, and you can get a portfolio of real estate that appreciates at about 13% a year. But the main thing that the company has worked on is how do we create secondary liquidity such that somebody isn't stuck in this asset for years and trading this liability and doing things like looping it in DeFi. So I'm all for trying to bring new assets to consumers, because I think, to Pranav's point, if you imagine that there are more people with smartphones and bank accounts, stablecoins enable US dollar banking. All right, what are those people going to do next? They're going to want to save, they're going to want to spend, and they're going to want to earn. And what are they going to want to buy? And there are tons of really interesting products in DeFi, non-custodial products that I think are really interesting. And then, like let's give them equities. Let's try to figure out what they want. But the beauty of crypto is that you can start packaging these things in unique ways. But again, if you can't sell it and you're just selling somebody a liability, like that's a problem. So the way I view the RWA market today is like, it's not a good representation for the future.
Well, also like the RWA players of today, in my opinion at least, shouldn't be trying to sell it to the end user. Ultimately, all this should be somewhat of a curated experience where you probably have a fintech that's kind of acting as like the arbiter of some sort, where it says these products suitable for my investors or my customers, these products are not. And then I think that's what the consumer also wants. Like, I don't think most people want to download, a Phantom wallet and then go off to the races, try to like find products they want to go speculate on.
I think curation's a part of it. I think regulation's also a part of it. Like if you're selling, most products today are being sold to like qualified purchasers or qualified businesses, right? So like you need to have 25 million of investment assets, and like immediately the TAM starts to decrease dramatically. I think part of the problem there is like we want to distribute this to users in DeFi, but also that means you need to have layers of risk. So the asset management firm is going to go sell to the DeFi protocol that's going to wrap it and go sell it to the end user. In some cases, there's many layers of risk. So I think on the regulatory side, what we need to be pushing for is enabling the blockchain to be the primary record of ownership versus a secondary copy. Because now you're decreasing the layers of risk. It's just you have this purely digital asset, even if it's a share of Apple, even if it's a share of some tokenized REIT, for example. And that will I think, disintermediate the middlemen that we've already started to create in our own market. So my worry is that like that user in Argentina who starts with the dollar and then moves into treasuries and then equities, like has the same problem where you're creating scenarios where you could have a bank run. And so that's like, when it comes to tokenization, like I'm all for the big picture, but today, how do we zoom in on like the little things and enable liquidity, which is the biggest part?
How do you think about illiquid assets, if at all? Or is that just kind of not top of mind right now? You really just want to hone in on like liquid ones that can be tokenized?
There are a lot of illiquid assets like funds that I think tokens are just a better vehicle for, right? So like Athena took the carry trade that would previously have been packaged as a fund. That's now available through a single token. And then again, people have created secondary markets for that. So I view it through the same way, Manifest tokenizing home equity investments. You're taking these private funds, private credit's another example, but again, you have to go create the secondary liquidity. It's just like inaccessible to retail. And now you're creating a platform to publish it to retail at internet scale. So I think that's very powerful. And I'm all for trying to bring new.
I think the other area that's kind of interesting is tokenizing essentially like late stage tech private equity, essentially, right? It's like, tokenized SpaceX LP units, because I mean, the number of SPVs and essentially funds that exist that only hold SpaceX shares, there's so many out there and there's enormous amounts of fees there. So, and then the big concern ultimately there is like, do I have actually access to the cap table or do I not? Like, because it's like, these SPVs on top of SPVs. So bringing some transparency and cutting costs there makes a ton of sense. Getting investors exposure to it. Some of the things we've seen on the equity side there is fewer and fewer high quality tech companies are going public. They would rather stay private. They would rather do this periodic tender approach where they're giving employees and investors liquidity through these tenders. And that's where sort of like these shares essentially transact, and you can, as a third party, step in and participate in an SPV that has, let's just say, exposure to SpaceX. And so tokenizing that and allowing all of that transaction to happen on chain could be kind of interesting.
Mm-hmm.
I think it'd be more interesting though if SpaceX, for example, issued shares on chain so that you wouldn't have the layers of SPVs, which is
Right.
kind of the current problem with the secondary markets. But yeah, I expect equities, like private companies, will be able to do this because it is, I mean, today you have Carta and you have other systems, like you can use a blockchain for this and it could be equally as good. So I think through Hester Pierce's safe harbor proposal, through the market structure bill, like hopefully, 2026, you could see companies start experimenting with this.
Mm-hmm. I also think the IPO market is an interesting one because there's like perhaps a rush for crypto companies to then go public. But then there's also the reality that not all of them want to or don't really have to. If they do it on chain, I know there's a lot of talk around that as well. Is there any relationship there with VanEck, or do you think about that opportunity, maybe with the startups you work with or from the liquid side of things?
So we would look at it from the perspective of if there is an on-chain IPO, is that an interesting investment for us in our fund? We would look at that. Now, I think the tricky part there is if something is exiting well, I think there's two flavors of it. You might just see a project just launch a token and then have a foundation and then eventually through some governance mechanism return value to the token. So the token kind of looks like, it's hard to describe what it exactly is, but let's just say it has like some properties of being an equity. Like that's approach A. And approach B is now like, I will just call it an equity and do a tokenized IPO. The big question there is like, how do you get liquidity for that asset? Because if it's a pure walled garden kind of opportunity, then you're kind of constrained. Like you don't have the liquidity of the public equity markets. You don't have the liquidity of the token market. So where is your liquidity coming from? So that's kind of like a big question that I have. But we look at it.
My answer to the liquidity piece there would be, I don't think that the distribution channels are going to change. I think they're in place. It's Coinbase, Binance, Robinhood, Phantom Wallet, right? So it's more about how do we create plumbing to those users to go.
But that's just retail, right? Think about the institutional liquidity.
But I think that will come, but I think crypto starts with more of a retail focus. And so, for example, ICOs, if done compliantly, I think are a massive market, right? We had something like 15 plus billion of those in 2017. I think there's demand for that. I don't know when this podcast is going to air, but I'll say that we're leading an investment in a platform that enables compliant token offerings. And so I think you'll see this blend of companies that kind of sit in between a traditional equity and a crypto asset. They're not DAOs. They're kind of more like internet native corporations that operate on chain, and through, again, hopefully these bills and these safe harbors that are coming up, you'll see experimentation around that. But it's the same thing.
I'm not going to ask you to comment on your former employer, but let's say Kraken, should they IPO on the NASDAQ one day or should they launch a token?
I think they would be better received within the crypto markets.
I agree
right?
with that.
And so same thing, like, people
like if Phantom launched a token.
Phantom launched it. Like, I think there's a
the
lot of
public
things,
markets
right?
wouldn't really care as much as we would.
No,
If
because they're not
launched a token,
diehard users, right?
Right.
So
The
it's
question
like,
is, do they launch it in this permissionless way where anyone and everyone who are on chain can buy it? It's on exchange, all these things. You can move the asset around. Or is it going to be like, like one of those walled garden things?
That's where I think the safe harbor comes in, where you enable these exchanges to actually be able to sell something that might be a crypto asset or might be a security. That's also one of the reasons why we invest in Denari, is because, and we both invested in Denari. Denari is a transfer agent. They're becoming a broker dealer. And they can use the blockchain as a primary record of ownership. So I think the lines between securities and crypto commodities, for lack of a better word, is going to blur. And I think that the companies who take advantage of that will be able to do net new, unique things. And I think now we finally have an administration that's going to let us actually try things. So they seem very involved from our interactions with them. They're interested in companies coming to them and proposing changes to prior legislation or helping educate them on how you could use a blockchain to do these unique things. So let's say, but I think there's huge demand for this. And I think it does start with retail.
Yeah.
I think it's going to be a while before real institutional capital comes in.
But what do you guys think about meme coins as well? Do you feel like the hype for that is kind of over? I saw the other day, I think it was the Moodang coin, which I don't own it, but I saw it went up like 400, 500%. Yeah, the hippo. Yeah, and I'm like, I was actually kind of surprised by that. And then like, fart coins always like going up and down, whatever.
Hot air
Still,
rises.
It rises and I've never bought it and I'm always regretful, I guess. But when you think about meme coins, do you guys still care about it? Have you? I think you cared.
Yeah, we care.
Yeah.
Our general view is it's kind of like slot machines, or less like sports betting, more like slot machines. At least in their current form. I think they can evolve, but.
Remember trying to move your assets between chains, watching the minutes tick by, wondering if your transaction would make it? Yeah, we've all been there. But here's the thing. While other bridges feel like taking the scenic route, Across is your express lane. Base, Arbitrum, Optimism, boom, boom, boom. Your assets move between them faster than you could say cross-chain. Across isn't just another bridge. When Uniswap needed the fastest, most reliable way to move assets cross-chain, they chose Across. Now, millions of Uniswap users are swapping between chains without even thinking about it, because that's how it should be. Whether you're moving assets yourself or building the next big thing in crypto, Across makes cross-chain feel like the same chain. No more scenic routes, no more complexity, just 2-second transfers between chains. Ready to join the express lane? Head to across.to and experience what bridging should have been all along.
People always want to make that big kind of 100x, hit the jackpot, and hence they go play the slots, right? Everyone, like, I think most people know that, like, when you go to a casino and get on the slot machine, your odds are worse. You should be, playing blackjack or whatever. But you still play it because the payouts are interestingly huge. So I think that element still exists in the meme coin market. Obviously, like, meme coin volumes are substantially lower than 3 months ago, 4 months ago. But one area we're finding interesting, I joke with one of our guys, he's always in the trenches. An area we find interesting is there are some legitimate businesses that are, small scale internet companies, whatever, that are launching what looks like a meme coin, has like no value accrual properties or anything like that, small market caps. But you could see how over time they could try to merge like sort of the business that they run along with what the meme coin represents, and how they can sort of start to create some interesting value for the meme coin itself. So we're interested to see how that plays out, where, legitimate, let's just say creators, operators launch a meme coin and then figure out how to bring it some value. The other one I'm always intrigued about is obviously in, October, November last year, Pump Fund had that moment where live streams paired with meme coins was having its thing.
Yeah.
Clearly, like, there was some PMF there.
Yes.
That I don't know if you guys watched the latest season of Black Mirror. The first episode, or one of the first or second episode, had that element to it where they're like one of the main characters for that ruining the episode was doing things on live stream for monetary benefits. So
yeah.
I feel like there's something there.
There's something there, but there's no restriction to it. So it's almost like very uncensored, crazy content to get a meme coin to pump, right?
Right. And if I remember correctly, Bonk and Whiff were something that was happening in the first half of last year. And you could have very easily said in the summer, like, this meme coin thing is kind of dying or whatever. Yeah. And then this streaming thing seems to find people's interest.
So maybe it doesn't die. It just like
it'll take a different shape.
Itself.
I think
I don't see why you need a meme coin though. Like, why can't you? Like,
what would you call it?
I would just say, like, what are we trying to enable? And so, like, if we're trying to have creators, like, increase distribution, make more money from the content, like, have a higher take rate, then, like, you can use stable coins to pay them. I don't know. Like, I don't think we need to coin everything.
But stable coins won't give you those crazy returns.
Of course. But then it comes back to, like, the casino piece. Which
Yeah.
is, like,
I think that's, like, the one. So one of the things I tell people is, like, I don't have any, like, issues with crypto being a casino. Like, the casino thing actually gives good founders very low cost of capital. You know what I mean?
Yeah, but I think we have so much of crypto as a casino that I mean, for me as an investor, like, I'm not particularly interested in it. Also, more so just like I'm not a trader, right? So a lot of these things are very short term, kind of hot balls of money moving back and forth, and, like, I don't know, it's exhausting. And, like, I don't think that there's enough long-term value. Like, if you don't get out before the rest of the crowd does, like, you're holding the bag. So that's kind of my fundamental issue with it. Like, even the content piece, I think that you can put content on a blockchain without having an underlying token. For example, I think you can enable creators to be paid in stable coins. Like that to me is like enduring value, and someone could build a big platform around that. You can live stream it. I just don't know if you need to have like your own creator token.
So another non-crypto VC manager that we both follow, Howard Linson, had this thesis a couple of years ago that seems to make more sense even today, which was he loves investing in two different things. One is like the luxury economy, like the LVMH type things, and then the degen economy, because he thinks both those things are going to continue to grow. And it seems to be the case. Like people, like
but who is the most profitable platform that came out of the meme coin, right? It was like Pump Fund and all the infrastructure that sat underneath it. I wouldn't say it was like largely a win for investors.
Oh yeah.
Right. So I mean, I don't know. At some point, like I do think and we've seen this before, right? We had ICOs, we had NFTs, we had meme coins. So like we go through these iterations. I don't think it will ever end. I'm just saying as an investor, I think you have to like focus and.
So no VanEck investments in meme coin platforms?
No, I think we will enable capital formation through like interesting crypto companies and companies that want to issue equity on chain and things like that. But yeah, and listen, if they create meme coins, like we had a company called Superfarm that was part of, or they created this thing called Piggy, which is like an interesting CAC tool. They took the meme coin and enabled people, like if you held it, you earned additional points towards their token. So like there are interesting things, right? But if it is the only play that undermines your project, then I think we've seen there's empirical evidence suggests it's going to go up and come right back down.
I would say pure like meme coin, like a fart coin or whatever, that doesn't make any like that's not what we're not doing.
That I find to be funny.
You find like that's
like that one.
That's like a meme. That is an actual
that one
meme.
is actually like funny enough where I'm like, all right, like that has like everyone wants to hear the person on Bloomberg talking about fart coins, right? Like that is funny.
No, I'm not disputing whether it's funny or not.
It's like like 1 in 10,000 can be a fart coin,
right?
So.
Well, I'm not. So from my standpoint, I'm not going to be focused on all of that. I think what I'm saying though is like what we've called this categories meme coins. There's an interesting subset where people are going to experiment, and it might turn into something actually valuable in the future because there's a business on the other side that could do something with it.
I agree with that. Yeah,
and
that's just a new type of capital formation, right? It's like using a meme coin to create an audience to attract attention to then go do something productive.
Yeah.
How else do you guys think about creating value, or what do you find not valuable? Before we started recording, you mentioned the word scams, which is obviously thrown around a lot in this industry. And I would argue a lot of things out there, not everything is scams, but there's a lot of vaporware, right? Or it's just like, why? We don't need this. How do you guys think about value? From obviously an investing standpoint and then from the fund side?
I think on the early stage side, like I don't think as many of these, by the way, would be labeled scams.
I know, that's why I said vaporware too.
But if they didn't immediately push for the valuations they've been pushing for, and if we had more disclosure into like market making activities, OTC transactions from the teams, right? So if a 24-month-old startup is now worth, 5-10 billion on the token, and that team is now rich and the insiders are rich and the investors are selling, then yeah, I think that's a scam. That's vaporware, because you're not actually delivering any value to a user. You're just exiting an investment. And so there's far too much of that. And this has been brought up a lot. We've talked about it a lot. People will say like, oh, there are no liquid tokens. There's no growth stage investors. Like, are you kidding me? There's tons of mega funds in crypto. There are a ton of liquid investors. The thing is that I can't go tell our portfolio companies to do that because these guys aren't going to buy it, right? Like, it's a crappy investment. So that is why I think the growth in liquid capital has dried up in crypto. It has nothing to do with like, not having quality teams. It's a price mismatch. And so we can't expect that the old factory system of crypto venture of just, go get a listing on tier 1 exchange, go hire a bunch of market makers and let's go pump the price, means that there will be liquid or retail buyers. So I think everybody's kind of pushed back against that thesis. So for us, it's more like, go build a product, go demonstrate product market fit, have the token be beneficial to that product. And then I think with real traction with real users, you'll be able to go get those exchange listings. You'll have people like Pranav buy the token. So I think that is another kind of fundamental switch we're seeing right now.
I just think a lot of the problems that exist in crypto today are downstream of a lack of clear regulatory frameworks for this space.
Around
so like
disclosures, yeah.
if we just had, if founders were just given the ability to do tokenized equities from day one, i.e. you could have done an ICO in this current format or whatever. You can launch your project, have your token just accrue value from your business, and then you can use this token in novel ways because it's programmable. Like that's what people really wanted. And this is what probably people wanted in 2017, something people wanted in 2020. We just never got to a place where that was allowed, but the industry continued to kind of persist and we're all trying to like make it work. And ultimately what you have is like a very small number of high quality founders that are sitting around saying, why is my token or project not getting any appreciation or love, versus like, XYZ scam is getting a lot of love. When I say scam, it's usually like when it's 99.9% narrative and like 0.1% anything useful.
Those people got rewarded, right?
Yeah.
So it became the industry norm.
They got rewarded.
Yeah, they got
That's
rewarded.
true.
They got rich. So like they got rich. The retail investors got rich. And then it was like, let's airdrop them more tokens. And so we've created this bad system. But I agree. But if we had clear regulation, those people would not be rewarded. And the projects that actually came out, provided disclosure, and just like built alongside their community.
But also what I would say is like, as I said earlier, the altcoin market's like 750 billion. Last I checked, the amount of liquid managers, people like us, is about directional liquid manager around 10 billion. So like everything really is like primarily retail. Institutional capital hasn't come in. When it does come in, it's going to dwarf the amount of retail capital that's in the space, and it's going to want to allocate capital rationally.
We do have a lot of VC capital though, and that, I think something like $60 billion was raised between 21 and 22. It's, it kind of follows the price of Bitcoin, but my view there is like a lot of VCs have been doing liquid activity, but again, they're not going to buy it as well. So we do have like a little bit of a market structure problem there. But if you look at like, we have more data platforms that have popped up, the likes of Artemis, kind of building on kind of the early Dune era, to now being able to go in and really understand like the fundamentals behind a business, who's generating fees. The whole hyperliquid movement, I think, was really positive. So more companies are thinking like, how can I actually have true PMF, really good metrics, make money? And how can I tie this token in so that retail can get involved earlier? Mm-hmm. And that's our thesis too. Like, I shouldn't have preferential terms or disclosure or information asymmetry to a retail user who's like a power user, or frankly, anyone who wants to get involved with the project, right? So I think I'm optimistic that in like the next 24 months, we will get some sort of safe harbor and things that will enable this. But I think until then, you're going to keep having these issues where tokens go up to like $10 billion and go to zero because of these like, back office deals.
So you've had tons of founders on your podcast. I like listening to your podcast. Who are your favorite?
Thank you. Who's my favorite?
Yeah, who are your favorite founders?
I don't have favorites. They're all my children. That's how I always joke. No, it really depends on like the specific topic.
What do you think is going to happen over the next couple of years? Do you think...
what is this? Interrogation? A reverse Uno card?
This is the Wyatt and Pranav show.
Yeah, this is your show now. Here, you guys take the mic. What do I think in terms of...
Like, how do you see the industry maturing, dude? From your point of view, like the founders you're meeting, the types of deals they're doing, right? You mentioned Securitize was on.
Yeah. I think on the token front, I think there was a lot of fatigue for a while, and then it comes in waves. And that's why I was talking to you guys about it too. It's because it's like, oh, you think it's over and then it's not. And it's like someone out there is still betting on these slots. And I think that'll always exist, right? Like the casinos always have people in them. Even the people who got burned, they'll be replaced by someone else. Or people who have the money will stay in the game. So that's how I think about that side of things. With tokenization, I think there is a lot of value to be had with liquid assets, but not everything needs to be tokenized. And we've talked about this with guests in the past, and obviously you guys touched on it too. But in terms of like what's possible in the future, I do agree that like the regulated side of things will definitely expand and kind of change the dynamic of how this industry can and will operate in the future.
I'd agree with that.
Any follow-up questions? No. Okay, back to me asking questions. All right, fair enough.
We're not professional.
No, yeah. I know, it's tough. Kidding. How do you guys kind of put on your blinders then when there's so much noise in the industry? How do you focus on narrative and keeping your strategy aligned, even if everyone else is telling you you're wrong or the market is not responding the way that you think it should?
I think the very simple thing for us or on our side is a lot of skin in the game. So I'm personally a very large investor in the fund. And I literally think of it as an extension of my balance sheet and how I would want my capital to be allocated. So when someone's like, I obviously have a responsibility to do what's in the best interest of investors, but it's an additional sort of check for me because I have such a large amount of my own personal capital in it. The thing I sort of, when something's being kind of shilled to us, we just ask the very basic questions, which is like, what's unique about this? Do we like the founder? And can we track some metrics that show, is this thing working or is this sort of just being gamed? And so we just focus on, I think, ultimately the data to sort of see if something's working.
And then for you, how do you think about
You're also a big investor in your own fund. I'm an investor in Wyatt's fund.
Yeah, no, I listen, I think incentives rule the world. And so like similarly, we're all investors in our fund. I think you have to be focused at our stage. We are thesis driven, founder led. It's like all about the people. And so we have to look at them and say, like, do we want to be in business with them for 10 years? In crypto, there are narratives. I think having the experience of investing for a while in crypto has been very helpful because, first it was Bitcoin L2s, Bitcoin DeFi, AI agent tokens, all these things, right? So you have to, again, look and say, like, is there fundamental value here? And do these founders who we want to be in business with for 10 years have some unique insights that is aligning with some inflection point in time that we can capitalize on? And so I love meeting teams that have been thinking about some space for years before it was cool. Fintech, I think, is one of those categories where now it's cool, but like 4 years ago, it wasn't cool. And if you were building in that space, you got to meet people. And so my co-founder and I in this fund, worked at Circle and helped build the USDC ecosystem and got really close to a lot of these founders. We're sitting there and we're building real things. And now, again, they're hitting that inflection point. And I think those are the types of teams we want to back. So focus, like, we're not narrative driven because narratives come and go. And exactly. I think like even tokenization, for example, I think it's still like quite a misunderstood narrative. People know that they want it. They don't really know what it is or how to make it work. And so we'll find out like maybe 2 years from now that it's cool. And by that point, like hopefully those teams will be, scaling aggressively. So
the thing I would also say is in our fund or strategy, we can invest in public equities. Like that's kind of makes us unique because we can do both tokens as well as equities. We can really go where the opportunity is. And I come from sort of the equity world and you go meet these management teams and you kind of spend time with other public equity investors. And what you'll quickly realize is the public equity market's really focused on the next 3 months or this next 6 months, not the next 2 years. So one of the things we've done in our strategies, we've kind of outlined a set of internet companies and e-commerce players, both domestic and international, who are ultimately going to be winners of stablecoin adoption, who can really transform their cost structure by getting rid of interchange fees. So we're going down that list and we're finding hopefully winners and then investing capital there. And I think that kind of puts us in a unique space because public equity investors aren't doing it. Crypto investors aren't doing it. So it allows us to hopefully get some things right there.
You have to find your niche. I think too, like being at VanEck is like a structural advantage. And so you have to kind of lean in like, and, I've never really worked in kind of social or consumer investing. Like I've been thinking about this and we work within a large asset management firm who's trying to solve the same problems. And so when you can work across funds and talk to product managers and talk to Jan, like collectively as a firm, we're, I think, better at solving these types of problems. And then, over time we can expand to different types of funds and products. But like today, we think this is, where the action is. And we think we can become a really good partner to founders.
What do you look for in a founder? I've had a lot of VCs on and I always ask them that because some of our listeners are founders, people who are raising even like hackathon winners, right? And so when you're looking at all of these different term sheets, decks, et cetera, or just meeting founders at events, what kind of clicks for you?
Vibes.
Yeah. How do you characterize vibes?
Vibes. No, I think it starts with like a really clear articulation of the problem that they're solving and why they are uniquely positioned to solve it and why now might be the right time. You still have to caveat that like there's a very good percentage chance that they pivot, but would you back them even if they pivot? And again, like I think about it of like, do we want to be in business with these people for 10 years? Sometimes people...
That's a long time.
It's a long time.
Than some marriages.
Yeah. It's probably
a lot
longer
of
than most marriages.
Probably, yeah. That's
I've been with my wife for 10 years, but
all right,
married for
congrats.
4 or 5. Yeah. So we made it.
So you picked the good vibes.
Yeah. So I'm a good investor.
He's a good investor.
But yeah, like people will be like, oh, do you want to get, do you want to spend 2 hours in a car with them? It's like, you should be excited to work with these people. We always say, like, I think there's too much passive capital in venture capital and in crypto where, it's like, hey, here's this term sheet, as you said, like sign, and it's just, there's some good investors and you have these party rounds and don't worry, there's going to be a token someday. I just don't think we like fundamentally believe that. Like if we invest $1 million checks, we're going to have a small portfolio. We're going to have high conviction and high concentration in those founders. So when we back someone, we think that they can be the category winning team. And so you have to get to know them. You have to get to know their team members. But at the stage we're investing in, like, we don't have many data points. So the data points are like your interactions with those people. And when you're making a decision, I think you need to spend as much time as humanly possible with those people, which means you got to focus and block out everything else. So we say no, 99% of the time. And that's just the nature of the business. You're going to miss some stuff. But if you have kind of those power law winners, they're going to make up for it. And so you need to just be laser focused on finding the right people.
I would add a different layer to what I do. I think it matters less at your stage, which is you gotta have, like, let's just say all the above of everything you're talking about, like great product, great founder, all these things. The thing we look for is, does this founder and team have the ability to grab attention and mind share and then retain and grow that attention and mind share? So one of the things, tokens have done is, or the token markets have done, is make it very easy to launch a token, right? You can launch a token and pump fund in 2 seconds. So you're gonna have an abundance of assets constantly. And as a team that ultimately has a token, you need to figure out how to break through all of that noise and kind of migrate your way from like nobody knows about you to, hopefully like a top 50 token. Because again, if you go back to that end state where you're going to have multi-token ETFs, and these multi-token ETFs will have, let's just say, some set of rules, like has fees, revenues, but ultimately a market cap of X in order to be eligible for that type of a product. Then the founder that you're backing that ultimately launches a token has to figure out how to go from, like, let's just say, a very low market cap to a top 50, even to be eligible for the bigger pools of capital one day. So one of the things, and the way that kind of happens in crypto, and I think it's going to be the same, it's going to be consistent for a long period of time, is can this project attract mindshare and attention from retail? So when everyone gets super excited about infrastructure, right? Like you listen to every VC talk to a large allocator and they're like, we don't invest in apps, we invest in picks and shovels. Like, I'm like, that's a dumb thesis because picks and shovels don't get any attention in the token market. And I can show you many picks and shovels.
They're also proving to not be very good sources of value capture.
Right.
Right. So we're seeing that in the stablecoin model. We're seeing that in the underlying blockchain, like distribution is king. So I think it actually benefits the end user applications. Like they're the ones who are making, or protocols that sit on top of some of the blockchains.
Yeah.
I agree. I do think though that like there are some characteristics that we can take from traditional venture. And like, I always find that we kind of sit in between the two because you're starting to see more and more talent come from OpenAI and Visa and PayPal, Stripe, and they're coming into crypto to build really interesting products. And we love kind of both the finance part of it. We love the AI part of it as well. And so you need to capture mindshare, but I think a lot of that comes back to like, you couldn't do typical marketing in crypto. Like you couldn't run a Facebook ad or an Instagram ad, or you just get shut down. You'd be deplatformed. Mm-hmm. Now there's more of an emphasis on actually building good professional public facing brands. So that's something that like we are very big on with our companies too.
Ripple, great brand.
Ripple is a great brand. Yeah. But I think we need more companies that kind of fit that versus the overemphasis on marketing, which then kind of gets the vaporware scam piece as well. So you still need the product, right? You need all the boxes. You need good product, good team, good investors, good transparency, and good marketing. So I think we're getting there.
Amazing. Last thing, guys, can you leave us with a piece of advice, something that you've carried with both of yourselves throughout your time in the industry?
I think patience and staying power is most important. I got into crypto in 2018 and I've been through 2 pretty awful bear markets where it kind of felt like this thesis would never happen. And I just stuck with it. And I stayed and I have kept investing and looking at the same, fintech on crypto rails has kind of been my guiding light since really like 2019. And so not being discouraged and being patient with your timelines. And so I feel very fortunate to be here today, still investing in that thesis at VanEck. and hopefully this time the timing is right.
There we go.
So wise.
You're welcome.
There's an NYU professor that I like, Scott Galloway. He always says this. I'm going to repeat his quote, which is, things are never as good as it seems and things are never as bad as it seems. I love that quote, because the coins are volatile, the timeline is like depressed or euphoric constantly.
Crypto is,
and you just have to like honestly counter trade that in many ways.
it's a roller coaster. So yeah, you just got to hang on tight. I think we're kind of saying the same thing.
Yeah, that's why you guys are good on the show together.
This is going to be like your least like interesting show because we're not shilling anything. How do you balance that?
Well, do you want to shill anything else?
No,
nothing about VanEck? No, I'm just kidding.
Great
We
merch.
don't shill on this.
Great
Thank
merch.
you.
Yeah, follow the VanEck intern.
Yes.
That's what we're saying.
I do like the intern account. Amazing. All right. Well, thank you so much for coming on, guys. It was a pleasure.
Thank you for
Thank
having
you.
us.
Yeah.